And joining me to discuss the markets, both in the U.S. and globally, is Allison, Chairman of UNIO Holdings, and Peter Cardillo, the Chief Market Economist at Rockwell Global Capital. Gentlemen, thanks for joining us tonight. So, John, we'll begin with you. What do you make of today's sell-off, a knee-jerk reaction to the Fed, or maybe investors just taking some profits off the table?
I think both of those are right, but I think it's this. I think the balance of forces in the market is generally positive. Accommodative Fed, less systemic risk, companies doing reasonably okay, on balance. But I think there are some negatives that they've shown themselves today. One of those is what happens when the Fed doesn't ease so much. And I think today you got a little glimpse in the FOMC meeting of what happens when somebody's interpreted to be saying it might not happen and the punch bowl might be taken away. I think that's all it is. I don't think this is the beginning of some horrible decline. It could be a correction. It could be a 2% correction, a 5% correction, but ultimately that's what I think.
And Peter, do you think that the rally still has a lot of room here then?
Yes, indeed I do, and I think we're probably going to close this quarter quite strongly. I'm looking for 1575, 1585 on the S&P by the end of March. Now, of course, the market is at high levels, and what we saw today was just basically a little bit of a pullback, some profit taking. I would kind of characterize it that way. And of course, the Feds did show that perhaps maybe if the economic numbers continue to come in on the plus side, which I think they will, and we don't have the automatic spending cuts go into effect on March 1st, then I think, it's safe to say that even if we do get higher yields over the next, let's say, 4 to 6 months, that the market can still continue to move on higher. And that's going to be based on two factors.
Right.
One, the economic expansion. Probably we're looking at 2.5% growth this year. And more importantly is that we're looking at the global economy picking up steam, perhaps by 0.75 percentage point. And that, believe it or not, is going to come out of mostly out of China.
Well, you're both very bullish then on the markets. What do you think could change that direction? What kind of catalyst do you think would reverse the uptrend?
Well, I just want to put what I said in some context. That somebody asked me how bullish I was the other day, and I said it's like climbing a mountain. Things are going up, but the mountain has avalanches and lots of crevasses. Right. So you're asking about the crevasses. For example, you could have economic setbacks. In Europe, you have the north versus the south. The south has been out of the picture. Spain, Italy, they could come back as problems. You could have.
Well, you mentioned Europe. Today, we had some unrest coming out of Greece, new protests over austerity measures, though overall, the Greek economy and the euro, the euro market has shown some signs of recovery. The FTSE 100 up about 8.5%. The Euronext also performing very well this year. So do you think that we're kind of over the whole European crisis?
I think the systemic risk has been drained for the moment out of Europe. But I think the divergence between the North and the South is actually widening, and I think it's something people haven't fully understood, how much better Germany and the Scandinavian countries are going to be than the southern countries. So yes, the big systemic risks are gone, but this divergence is growing. So that's one of the crevasses, and you could have things like, I don't want to, war. You could have Middle East war, Iran, right. You could have Korea, all sorts of wonderful things like that. And you've got to be on top of it all.
We could have those black swan events, like you say, Syria, Iran, North Korea. There's always volatility in the market. Peter, you said you're very bullish on Asia. The Shanghai Composite performing very well. What do you think could possibly derail that or further those gains?
Well, what would derail it is if obviously we would see the U.S. economy slip into negative growth, and that would obviously take a bite of China's growth.
And you're not worried about what we're going to hear from Washington with those budget cuts?
No, I think that, look, I think that it's not often that I agree with Mr. Obama, but I must say that yesterday in his press conference, I think he laid it out correctly, that we can't afford to have these automatic cuts go into place. We need more sensible reduction of the budget. So I kind of think that, even though the opposition has said quite often that, this time they're going to go to the very end and let the cuts go if Mr. Obama doesn't get serious. And I think that that's not going to be the case. And if that was the case, the market would be telling us that. The market has not told us that. The market is a storyteller. It always anticipates. So if the market was really afraid of the automatic cuts, we'd be down maybe 10, 12, 15%.
Well, we're certainly not, and you both see that there's room for the upside. Thank you so much, gentlemen. That's John Allison of UNIO Holdings and Peter Cardillo of Rockwell Global Capital. That's all we've got time for now.